we will expose the true mismatch between how much future electronic contracts there are versus how much physical. And once that point of truth is reached, that's where people talk about the moonshot. People talk about $50 silver, $100 silver, 200. I think Keith Newmeyer says 200. Other people saying, I think David Morgan put out a tweet saying $400 per ounce, etc. So when people talk about a sky high in the price, we're talking about that point of truth between reconciling how many electronic contracts versus how much physical silver there is, and that point of truth will demonstrate that we're potentially dealing with the largest financial fraud in the history of financial markets.
Some people call maple syrup liquid gold, and they think that putting it on pancakes and waffles is an idea that's pure gold. Well, at Miles Franklin, we think a pure gold idea is taking real liquid gold and turning it into real solid gold Canadian maple leaf coins. That's why right now, for a limited time, we're offering the purest gold Canadian maple leaf coins at just $105 US over spot. That's 4 nines of the purest gold there is in a pretty maple leaf design. And at only $105 US over spot, we'd say that's an idea that's pure gold.
Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com.
Welcome back to Liberty and Finance. We have a returning guest from Australia. This is economist John Adams of Good as Gold Australia and the chief economist there, as well as adamseconomics.com. John, thanks for joining us again this Wednesday, March 24th, 2021.
Thank you, Dunnigan, for having me.
You know, you've caused quite a stir over the last couple of weeks by blowing the horn of alarm to get people to wake up to the physical silver challenge that is being faced not only on certain bullion exchanges, but also in big name unallocated accounts and ETFs. We had you on a week ago talking about that. We've talked with Andy Schechtman, CEO of Miles Franklin, a couple of times about that. And both you and he have been forwarding to me tweets and emails that you've been receiving firsthand, personal anecdotal accounts from many, many different investors who are trying to stand for delivery or trying to convert unallocated to physical and are finding themselves told, you'll be waiting perhaps months to make that happen. It's even raised so much of an attention from the public that you're going to tell me about some amazing number of views that a tweet that you put out about the Perth Mint has had. And we also even had the head of the Perth Mint coming on and having to give a public statement on a radio address just in this last couple of days to try to present their side of the story. What's all the flap about? What's the concern? And what do you know now that we didn't know a week ago when we spoke with you about this?
Sure. So I think you and I we lit a fire because a lot of Australians watch your show, and when we talked about synthetic products and how if you take physical delivery, you can actually have an impact on the market. That definitely has caught people's attention, and so a couple of points to make. The first one is that there are enormous problems at the Perth Mint in terms of people wanting to take delivery. In terms of new orders, it's interesting. So this is, I'm speaking on Wednesday from Sydney. I got an email on last Friday from a Perth Mint customer. He, as soon as I got the email, I gave him a call. He said to me he bought 20 kilos in a new order. So this was not a synthetic position, but he just placed an order on the Perth Mint for 20 kilos. And he was told 4 months for 20 kilos. Now, if they had come to us, if there's a few other private sector providers in the Australian market, 10 days, we can provide 20 kilos. So 4 months seems extraordinarily long, and that signals that there is some sort of problem at the Perth Mint. And when I had that information, I relayed it back to Andy Schechtman in an email, and he said that if you're waiting that long for that sort of volume, it's a pretty dire situation. So that's the around a new order. Now, in terms of some of these synthetic positions, what I can reveal is that we had a large client, we're talking in the millions of dollars, who had a synthetic unallocated position at the Perth Mint. He came across to us last week and actually bought physical. While we were in commercial negotiations, what broke the straw that broke the camel's back was he put in a call to the Perth Mint just before he confirmed the deal with us, and he said, well, if I want the physical, and we're talking in the tons, how long do I have to wait? And he didn't get the answer he wanted. And that was enough for him to say, okay, I'm going to sell my synthetic position to Perth Mint and go to another dealership and buy physical. There have been a range of other customers of the Perth Mint who I've been in contact with over the last week who have tried to stand for delivery, and they have had some issues. So let me give you some specific examples. I had one person who had about 20,000 troy ounces pull allocated. He contacted the Perth Mint in writing a month ago. Never heard back from the Perth Mint. Couldn't get an answer out of them. I had someone call me on the weekend who had about 2,500 ounces unallocated at the Perth Mint. Now, he was one of the first unallocated customers in the unallocated program. He thought he had a long-standing relationship with the Perth Mint and everything was fine. Called them up a few weeks ago. They said, we have some problems. Can you call back in a couple of weeks and we should be able to help you out? So he called back last week, which was 2 weeks after the first call. And they said, we cannot deliver. And so he's lost all confidence in the Perth Mint, and he has decided to liquidate his position and go into the private market looking for trying to look for physical. I had one person last Thursday. Now, again, a very small account. He had a very small holding of 750 ounces for his son, unallocated at the Perth Mint. He called them up, said, okay, I want 750 ounces. They said, we'll have to put you in a queue before we can actually respond to your request. He was dissatisfied with that answer. So he called us up and said, okay, I'm selling my 750 ounces unallocated at the Perth Mint. I'm coming across to you. Now, interestingly enough, one of my friends, and I tweeted about this, he said to me that he did, like, we had a conversation on Saturday. He didn't believe me. When I said there were problems at the Perth Mint, he had 200 kilos unallocated. So I said to him, if you don't believe me, even though I have a whole host of other people across the country saying to me that there's a problem, call up the Perth Mint on Monday. So that's what he did. He called up the Perth Mint on Monday, and he said, if I want to convert 200 kilos to allocated, can I do it? And he said, I'm sorry, we can't do it. We don't have any silver on hand. But having said that, there was a shipment of silver that the Perth Mint received on Monday afternoon, Perth time. And as a result of that, a couple of things happened. Now, this client that I spoke to last week, who was told he had to wait 4 months for 20 kilos, all of a sudden, 4 months turned into 2 days. So he got a call on Monday and saying you can come into, because he actually lives in Perth. They said you can actually come physically to our premises on Wednesday, which is today, and pick up 20 kilos, no problems. We'll have it for you. So now he did ask subsequent when he got this phone call, well, if I place a new order on the Perth Mint, how long do I have to wait for a new order? 4 months again. So that's very interesting. Now, whether this other customer who couldn't get any guarantee, so he got told on Monday morning, no silver for 200 kilos unallocated, and then when he called me back, I said, did they give you sort of any form of guarantee on a time frame? No guarantee. He called back yesterday once he had heard that they had received a shipment of silver, and the Perth Mint said, if you're willing to take 1,000-ounce bars, so the wholesale bars which are used at the Comex and the LB-May, if you're willing to take 1,000-ounce bars, we can give you your 200 kilos. So he jumped at the chance to convert to allocated, and he took 6 1,000-ounce bars off the market, and he's converted from unallocated to allocated. So there clearly are some examples of people not being able to get delivery, And then obviously there was a small amount of silver being brought in on Monday. And I think even David Morgan put out a tweet with a screenshot of the Perth Mint saying that there was about 217 kilos at the Perth Mint. Now, for the one of the largest mints in the world, to only say on the website they have only 217 kilos, that is quite shocking. So they were able to stem some of the anger. And to be honest, I put out a tweet, I think on Saturday, and I thought, to be honest, only a couple of people would read it. And I said that, breaking, I've heard in the last 24 hours, horror story after horror story from Perth Mint clients. They are unable to convert synthetic to physical. And I said the Perth Mint has defaulted. Now, that tweet, as of this morning, had 340,000 impressions. Wall Street Silver reposted it on Reddit. David Morgan, Craig Hemke, David Brady, a whole bunch of industry giants retweeted it. James Anderson from SD Bullion as well. So it really made the rounds, and it really got everyone around the world buzzing. And I think the attention that tweet brought helped, or may perhaps even forced the Perth Mint to try to fulfill some of the back order that they had. And so they've been able to do some of it in terms of Monday afternoon. But I have friends across the industry, and I got a phone call from an industry colleague last night, and he said at his organization, he got a phone call from a Perth Mint client who had 30 kilos unallocated. He had placed a call on Tuesday. So after this shipment that came in Monday afternoon, which helped stem some of the backlog, this person called on Tuesday, standing for delivery of 30 kilos, looking for some sort of guarantee. He was told, sorry, we can't help you. And so that person has decided to liquidate his 30 kilo synthetic position and go into the private sector and actually try to source 30 kilos. So we are seeing quite a bit of turmoil, a lot of chatter. Now, why is this happening? 3 potential reasons. The Perth Mint says there is an issue with fabrication. There's an issue with manufacturing, operational issues. Now, they are producing coins, and I know that Andy Sheckman has done a couple of interviews in the last couple of days, and he said that he placed a large order, I think for 75,000 1-ounce kangaroo coins, and they are supplying coins across the Australian market as well. So there is supply of silver coins, but when it comes to bars, that is where the issue comes into play. And the problem is so acute that 24 hours ago, the Perth Mint removed their entire product silver bar list from their website. So if you go onto the Perth Mint website now and you look at what silver bars they have available for sale, the whole web page is blank. So that is how chronic the situation is. So with all this public pressure and attention, the CEO of the Perth Mint was forced to give a radio interview with ABC, so the Australian Broadcasting Corporation, which is our public broadcaster. He did an interview on local radio Perth yesterday, so people can go and listen to the interview. He had a number of very interesting things to say, but one of the most extraordinary things he said was that, so now I put out a tweet this morning. The tweet, I posted what the Perth Mint website says, and it clearly says that if you have allocated, the allocated position is deliverable in 2 days. If you have unallocated or pool allocated, it's deliverable within 10 days. Now, I got some flack from some of my Australian colleagues because I used the word default. And what I meant by the word default is basically customers are not being guaranteed that they can convert a synthetic position to physical within 10 days. Now, the Perth Mint CEO, Richard Hayes, goes on ABC local radio and says the 10 days is actually referring to quotation and arranging freight costs. It doesn't actually mean taking physical. Now, I just found that extraordinary. The website clearly says deliverable in 10 days. And so, whether it's as good as Gold Australia, and I'm sure Andy Sheckman can sort of vouch for Miles Franklin or other providers across the world, it does not take 10 days to provide a quote and to arrange freight. 2 days, depending on the complexity of the transaction, 1 day, 2 day max. So the fact that he's saying the 10 days is actually misunderstood. It's clearly they are trying to confuse customers and investors by putting up smoke and mirrors. I mean, the website clearly says deliverable in 10 days. What does 10 days mean? It means you've got to come up with the silver, and they can't. And that has obviously caused enormous problems for customers and investors at the retail level, because from our last discussion, so we did our last discussion, and then I did a show with Martin North on our channel, In the Interest of the People.
Saw that
and we
one,
talked
yeah.
about, yeah, so the title of that show was Exposing the Synthetic Silver Scam. And we played some of our last interview on Liberty and Finance on that other channel. And we explained to people what's the difference between physical ownership or even allocated, where you have legal title, direct legal ownership, versus unallocated or pull allocated, which is you own a promissory note and you technically don't own anything of a legal nature. So we are clearly seeing a number of investors who fully didn't understand that distinction and what are the implications of that. And I'm hearing from a number of organizations in Australia, people standing for delivery in terms of physical, and people are trying to convert synthetic positions into physical. And obviously the Perth Mint has been found out where people have tried to convert, and there have been problems. So, one of the big points to make is in a normal calm market, if you have a synthetic position, generally there's no problem converting to physical in a reasonable time frame. But the risks, the counterparty risk of a synthetic position comes out when you have a financial crisis or a squeeze in the market, or there is some sort of problem in terms of supply. And then when those issues arise, well, then you really see what you really own. So the danger that Dunnigan, you and I discussed in our last show, is not when the market is calm. The danger is when there is a problem in the market. And obviously, if you don't own it, if it's not your legal property, you have a really big issue.
It's interesting because, as you know, the name of my channel for the first 8 years was Reluctant Preppers. The whole idea of preparedness is making ready at a time of relative calm, so that when there's a crisis or an urgent need or a natural disaster or whatever, you're already ready. You're prepared. That's the whole idea of preparedness, is making ready. And here you're talking about that people who have, I would say, fallen for the enticement of the low cost proposition of unallocated, pool allocated, or ETF participation in silver ownership. What they've fallen for is this misconception that what you're doing is lowering your risk, because you're lowering your risk. Their overall goal may be to just participate in growth appreciation of an undervalued asset, fine. But if their goal is also to be able to say, I'm reducing my risk of exposure to the fiat currency system that's gone on an exponential growth runaway curve, or I'm reducing my exposure to the banking system that's got derivatives at a level that is never seen before in the history of the world, or I'm reducing my risk of exposure to debt and deficits and abnormal bond yields that are suppressed, and equity market bubbles and bond market bubbles and real estate market bubbles, by owning something real, then your point is that, well, guys, if what you were trying to do was reduce your risk at a time of upset, or a time of a lockup, or a time of a credit crisis, or that kind of thing, it's precisely at that moment that you won't be able to get your hands on anything, because it's exactly what you're describing about. So at the time that you need it the most is the time you're not going to be able to get it, is what I'm hearing from you.
Precisely. And one thing that I can reveal for your audience is that, so I started this campaign against synthetic products, I think last June, when I wrote an article for my website. And now we've done some discussions, and we've done some videos, and we've done some posts on social media. What I can say with confidence is just me alone, and in the grand scheme of the silver market, John Adams is nobody. I've been able to convert so far 4.5 tons of synthetic product into physical. And that is 4.5 tons that basically is going to be denied in terms of New York, in terms of the Comex market. Okay, Dunnigan. So the other thing that I can reveal is that I mean, there are some further negotiations that I'm involved in that could be quite significant. But we are seeing a trend particularly in the Australian market, as we bring more attention to this issue of synthetic, we are seeing a lot more people say, okay, I want to take the physical because in at the end of the day is now people like you and me and others like Andy Scheckman and others who clearly openly say that there is manipulation, there is suppression. Part of this regime is how people are deluded into not owning the physical metal, and they divert a demand away. And that's what we discussed in our last show. And some of these synthetic products, I mean, they are critical. Now, one of the key things is that there are claims that these products are 100% backed. Now, what I showed in my recent show with Martin North is, well, when it comes to, for example, to the Perth Mint. Now, back in 2018, I did a number of shows about the Reserve Bank of Australia and their leasing of 11 tons of gold. That was 2018. 2019 in February, the Reserve Bank of Australia has asked questions in federal parliament about this because of my shows, and the RBA testifies to parliament that when we lease, the gold does not move. Now, initially I thought, well, that's a very strange answer because so the RBA says, well, we get leasing fees and that helps offset the storage costs. But then I thought to myself, well, who would borrow gold that does not move? Now, but before that question, I thought to myself, well, the RBA has only been in the vault on an extremely limited basis twice in the last 20 years. How would they know if the gold moves or doesn't move? But what came through Freedom of Information requests in late 2019 was who leased or who borrowed the 11 tons of gold? The Perth Mint. So their official name is called Gold. Their official corporate name is Gold Corporation. And who is the Perth Mint? They are a refiner, manufacturer, and they are a retailer. And they borrowed 11 tons of gold that physically does not move. So the question obviously comes is, well, what's the commercial reason for that? And the commercial reason is that they use 11 tons in a foreign vault to back up their synthetic position. So these synthetic products are, they use accounting tricks through leasing arrangements. So when the auditor walks in and says your exposure, for example, is hypothetically, just say 100 tons of gold. Well, where's 100 tons? Well, does the Perth Mint have some gold on hand and some silver on hand to back up their synthetic position? Absolutely. They have some. How much? I don't know. But what we do know is that some of their synthetic product is backed through leasing arrangements of gold and silver that they physically do not own and physically cannot get their hands on. Now, as of 30 June 2020, if you look at their balance sheet of Gold Corporation, you can see that there is a line item called precious metal borrowing interest bearing. That's 1.7 billion Australian dollars. Now, a portion of that 1.7 billion is the 11 tons of RBA gold, but then there is other positions, other lease arrangements, which could be gold, which could be silver, which are helping them back up their synthetic positions. But again, the Perth Mint is completely not transparent about this, and we only knew about them borrowing the 11 tons because of a Freedom of Information request. So there was two RBA officials that emailed each other, and it just so happened that someone asked the right question through a FOI request, and we were able to get that information out. So obviously investors, and I've had a lot of investors talk to me on the phone in the Australian market saying that the Perth Mint says their product is 100% backed. Well, now we've actually exposed in our latest show some of the shenanigans and accounting tricks that are used to justify that 100% backing. So it's clear to me that the Perth Mint is running a synthetic fractional reserve system. How acute is that fractional reserve system? That is unclear. But for those who believe that there is market suppression, that there is price manipulation, how do we bring this to a head? We drain as much physical gold and silver out of the market, and the best way that the retail investor can do that is by standing for delivery and taking physical ounces basically out of the system. And so one of the other key points I think Dunnigan is that you have people who invest in synthetic holdings on the basis they want to enjoy the rise in the price. Now, when I've spoken to a number of people, particularly with large positions, and I've said to them, well, if you convert from synthetic to physical and you deny the Comex that physical, so for example, I've helped 4.5 tons convert from synthetic to physical. So that's 4.5 tons that New York can't get their hands on. And so by doing that, you are actually participating and helping, bring the short squeeze to the point where the price is going to rise. So if you have a synthetic position and you want the price to rise, the best thing you can do, not only for the broader silver movement, but for your own financial interest, is to stand for physical, to take it out of the market, and you'll be able to apply in your own way more pressure. And I should say, even though that I'm talking about this largely in the Australian market, I have heard from a number of your colleagues over in the North American market that you do have some large providers of synthetic products in both the United States and Canada. And all I would say to any listener to this interview, if you are in North America and you have a unallocated, pool allocated, or ETF position, sell it, get the physical, and together as a global movement, we can crack the Comex.
Just my head is just reeling with things that I've been exposed to over the past several years, months, and days. One of the things is a quote from the Oracle of Omaha, Warren Buffett, one of the most famous investors of all time, who says, when the water goes out, when the tide goes out, you get to see who's not wearing a swimsuit. And what you're talking about is draining the swamp so that people can really see the truth. Another thing is when we were kids, there was a game, and I don't know if this was in Australia, but in the US, when you're about to start playing a game, you've got to have one person who's going to be what we call the person who's going to be like the center player of the physical game, and everybody else would shout, not it, not it, not it. And the whole idea here is, as Andy Schechtman's been pointing out for the past 4 years or more, central banks, large hedge funds, sovereign wealth funds, and others have been withdrawing record amounts of physical metal from the market, gold and silver. In other words, if there's going to be a game of musical chairs and somebody's going to be left without a place to sit, they're like saying, not me, I'm not going to be it, I'm not going to be it. This game can keep going on as long as there's still some stooges that are willing to be it. But if everybody who wants to not be the one that's stuck holding the empty bag is pulling themselves out of the market. The other thing is E.B. Tucker from Metalla Gold Royalties said that gold is a truth serum. The reason that it has been despised by bankers for generations is because it's a truth serum to what's otherwise dishonest money, being fiat money. And but here, the Reddit crowd has been saying, and we had clients calling me directly. You've talked about clients calling you. Clients calling me directly and saying, I want to buy 10 ounces of silver, or I want to buy 20 ounces of silver because it's for the cause. It's for the mission here. They were doing it for the purpose of bringing truth. It's like a small person. We're stuck with fake news on the mainstream media, on the financial media. But here's a physical action. What can I do about it as a small nobody? Like you're saying, well, here you're at least getting the word out there and helping people to be aware so that they can take those small actions of saying, I'm not going to be it. I'm going to get my physical and help drain the swamp so that we can see what the truth really is. It's all of those things just came colliding in on my head at the same time when you were describing that the purpose of withdrawing physical, so that you make sure that A, you've got yours, and B, everybody can see what the truth is about what's really going on.
Sure. And one of the key points that I think the silver community should be aware of is that the thing I've learned about this market is that don't look at the price, because we know the price is manipulated. So what's the best way to analyze the silver market? You've got to look at physical ounces. Where are those ounces, and where's it moving to, in what quantity and why? I think in the last show we talked about an article I wrote, and we can clearly see since the start of the silver squeeze, pressure in the retail market, the wholesale market, ETFs, leasing rates in London, in terms of the silver market there. And obviously in terms of Comex. Now, Comex is fascinating. If you look at the warehouse repository for silver, It peaked on the 2nd of February at 399.7 million troy ounces. In 6 weeks, 28 million ounces have left Comex. And as we get to the end of March, we're going to continue to see more silver being drained out of Comex. Now, once we get into April, I don't have the precise numbers in front of me, but April 2020, which is a non-delivery month for silver, about maybe 220 contracts stood for delivery. It looks like for April 2021, we're looking at about 2,500 contracts, which is maybe about 15 million ounces, which is a huge jump compared to last year. And then we get into May. And May is going to be a very big one. Now, what I can say is that as the data is presented to us today, March 2021 is the second largest delivery month in the history of the Comex. So the largest was July 2020 at about 86.4 million ounces. September was 55 million ounces. And March 2021 is about 56.4 million ounces. So it looks like we're going to be the second. And I think that May is looking like 60 to 65 million ounces. So now, I had some communication with Craig Hemke the other day, and he says that typically when people stand for delivery at Comex, nothing moves out of the vault. It's just a bunch of warehouse receipts going back and forth, back and forth. So he said that the fact that we can clearly see from the 2nd of February, silver is leaving Comex, that's a big deal. Now, the question becomes is, what is the crisis point for Comex? So at some point, as more and more silver is being drained out, they're going to have a lack of physical silver on hand to meet to meet the delivery obligations. And at that point, the price has to run. So why does the price have to run higher? Because if you have an obligation to deliver and you can't get the requisite ounces in the market, the price has to go higher in order to attract sellers. And that's what happened last July. So from mid-July 2020 to the end of the first week of August, the price ran 60% from $17.95 US up to 29. And in that process, a whole bunch of traders of silver brought supply to the market, and that's how they're able to meet a whole host of delivery obligations. So it seems to me that we're headed towards another sort of acute point as we get into April, as we get into May. But the key point is that we are seeing Comex leave the silver in unprecedented numbers. And the question is, we just don't know what the point is. Now, I had a very interesting phone call with someone who's extremely knowledgeable in the North American market about this whole situation. He's been looking at this for a few decades. He has heard that now, we said in our last interview, Dunnigan, that we don't need the big whale, that we as the grassroots people, we can crack Comex if we all stand for delivery and liquidate.
And I just want to clarify here for people, if anybody gets the idea, like when people talk about trying to do a run on the bank or a run on Comex or something, I think what we're talking about is trying to bring truth. In other words, if this were a true physical free exchange platform arena, then there would be no separation between it would be just fine. People could take as much physical off at the prevailing price, or put as much physical, sell as much physical, buy as much physical, no problem. But there's been this split of two universes. One universe where the powers that be and the mainstream and the regulators and so on are saying nothing to see here, folks. Comex is nothing nefarious going on there. And you've got so-called conspiracy theorists who've been saying, no, there's this huge separation between. This is a checking question. They've been saying no, that the paper price at which silver is being traded on the Comex does not represent what can be supported if there were true and unfettered access to physical. So, am I correct in understanding that when you're saying crack the Comex, you're talking about crack the deception, crack the separation between physical and paper, so that if people are able to take physical at the prevailing price, let's see how truthful that price is. Just keep saying I'll take delivery at that price, or take physical out of the market, and if it's true, no, there should be no problem. Should be no threat to the system if that's true. If it's not true, that this has been an unnatural price that's been supported through unnatural mechanisms and unnatural market behavior, then the market will not be able to tolerate that removal of physical to a point to where suddenly the price has to run to reconcile with reality. I mean, have I overstated that, or am I understanding it correctly?
No. I think, look, yeah. So I mean, Donnie, look, I do think you explained it quite well. So I mean, when you, I mean, look, in a very simple example, when you look at the volume of silver that's traded on the Comex, and these are electronic contracts, and you look at the daily volume of silver, which in some cases, I think during early February, I think Andy Sheckman said that 1 billion ounces was dumped on the market. Well, did they have 1 billion ounces physical to support those electronic contracts? And the answer is no. So those who claim that there is manipulation, what we're saying is that there's a mismatch between the volume traded on Comex, where the price is set, versus how much silver is actually available at Comex. And so by the term I use, cracking Comex, is the more we drain physical silver out of the market and they are unable to deliver. What the truth you talk about is that we will expose the true mismatch between how much future electronic contracts there are versus how much physical. And once that point of truth is reached, that's where people talk about the moonshot. People talk about $50 silver, $100 silver, 200. I think Keith Newmeyer says 200. Other people saying, I think David Morgan put out a tweet saying $400 per ounce, etc. So when people talk about a sky high in the price, we're talking about that point of truth between reconciling how many electronic contracts versus how much physical silver there is, and that point of truth will demonstrate that we're potentially dealing with the largest financial fraud in the history of financial markets.
I interrupted you earlier. You were on your way to making a point, and I just jumped in to understand what we meant by cracking the Comex, and you just helped clarify that. But I think you were on your way to
sure,
make another
yes.
point.
So the point I was going to make was that in our last interview, I said to you that we do not need the big whale. Retail customers across the world can crack the Comex by draining physical silver out of the global physical market. Now, I have heard in the last 24 hours from someone who has been looking at this for 3 decades that there is a big whale who is behind some of the open interest demand in April and May. So there looks like there is at least one big person with deep pockets. And again, I won't say who I've been told because I can't confirm it, but it looks like there is a whale circling. And obviously, if the whale does do what I've been told that he is going to do, that obviously will attract the attention of the industrial demand. So when we're talking about Apple and Samsung, etc., they're obviously wanting to lock in the biggest amount of supply at the cheapest price. So if they think that a big whale is about to move in and drive the price higher, it could lead to a surge in the wholesale market. And that's going to be very interesting to see over the next 8 weeks, whether that actually materializes or not. But separate to the big whale coming in, I do think that if John Adams, who's a nobody in the silver market, can actually help convert 4.5 ton from synthetic to physical, imagine what Dunnigan Kaiser and Andy Sheckman and other people in the North American market can do if you tell retail investors to convert from synthetic to physical.
Well, John, it's quite an eventful time that we're living in. I mean, I don't think any of us would have predicted a year and a half ago that these last 18 months would have brought all the changes that they have. This is just one of many. We've been talking about strains and imbalances and inexplicable unnatural behavior on metals markets for some time, though. This is not a new concern, but it certainly seems to be coming to a head at this time. And certainly the emergence of a grassroots effort of retail, ordinary, small individual investors, such as the Reddit Wall Street Silver crowd, was something that's a new dynamic. I think that's certainly coming into play now in a way that it hadn't in the past. It's going to be very interesting going forward. We appreciate you bringing us updates from the front. You've become a bit of a nexus of communication and awareness, kind of waking up people to what's going on. Eventually something like this sort of takes on a life of its own, and as more and more people wake each other up and share the information, it spreads to the point where it can't be kept in the dark anymore. And we're grateful for you continuing to help us keep abreast of what the latest developments are. If people want to find out more about your work, where should they get plugged in?
Sure. So people can go to my website, adamseconomics.com. People can email me at john@adamseconomics. People can follow me on my main YouTube channel, In the Interest of the People. In the last few days, I've been quite popular on Twitter. So more than 1,200 people have sort of started to follow me from the silver community. So adamseconomics.com. If I come up, so I've been tweeting a lot about the Perth Mint and a lot of updates that I've been finding out. And it really is about trying to build a global community and trying to find the best factual information. So I'm not involved in pushing anything that I can't substantiate. It's very interesting, Dunnigan. Before we started, you asked me, have I received any communication from the Perth Mint around a cease and desist letter? So the answer is no. If they ever wanted to bring litigation because of the comments I've made publicly, I have a whole cadre of Perth Mint customers who would be willing to go on the record and detail about their experience with the Perth Mint. So I'm interested in promoting factual information about what's really happening in the silver market, and that's pretty much what I'm doing. And the more people we connect with across the world and actually make these connections, the closer we are to liberating the financial system from all of this manipulation.
It's interesting because you've talked to us about this emerging awareness, this awakening awareness that started from perhaps the Reddit silver crowd, because people like you and I have been talking about these concerns for a decade, but just in the past few months, it's become part of the public conscious or the popular consciousness of at least a growing subset of the populace. What I wonder is, will that spread? Because what you're describing there is drawing back the untruth to expose the truth of fractional reserve banking when it comes to silver, the silver exchanges and the silver storage, that sort of thing. But will the light bulb go on for people that they'll realize, wait a minute, fractional reserve, where have I heard that before? And they'll realize that this is part of a game of dishonesty that has affected our currency itself, the world reserve currency, the US dollar, all the other fiat currencies. I wonder how far this awareness will spread once it really catches fire with more and more people who realize the importance and the impact of what they're finding here, and the importance of us standing up and saying we're not going to just be pawns in this anymore. We're not going to just cooperate with this system that's been extorting and taking advantage of us and giving us false promises that can't be delivered on. And it'll be interesting to see how far this goes for really improving the lot of awareness and liberty on the part of people all over the world.
So the only thing I can say about that, Dunnigan, is in the last couple of years, as I've been in the industry, I have come across a lot of Australians who have bought investment grade silver for the first time. And for some of them, they've also bought gold. Typically a lot of Australians will buy gold jewelry of one form or another, but particularly in terms of investment grade gold and silver, a lot of new entrants into the market in the Australian retail market. I'm sure you can say something about your exposure with people in North America coming into the silver market for the first time. So I think people call it the Great Reset. I think there is a great awakening that's been happening for the last 2 or 3 years, and it's just not just about economics. I think scandals like the Epstein scandal is really waking people up to say that there's a different world among the elites, and they're doing something different that is not in the interest of the ordinary person, the ordinary American or Australian. And obviously people want to have justice, both from a criminal justice point of view and a political point of view, but also from an economic point of view. And obviously people can participate in economic justice by moving their money. And that's why we're seeing new money coming into the silver market, I think.
Yeah, because it's a matter of, like, people like you and me, you talked about Craig Hemke, you talked about David Morgan. So it involves telling the truth, and it involves insisting on the truth, insisting on what is real and what is true. So the more individual people that say, I'm going to listen to people who are telling the truth, the more people like us who are striving to speak the truth, as well as people who are saying, in my own little way, I'm going to insist on being treated truthfully. And one thing that they realize is truth is something that doesn't have counterparty risk, such as real physical metal or real money, for example, instead of the fake money. That's very interesting. And folks, so that you don't lose track of us, no matter what happens, remember, we're not only here on YouTube, we're also on Brighteon and Rumble. And if you go to libertyandfinance.com, over in the left-hand side, put your name and email address. We'll get you on our free mailing list, and that way you'll get all of our interviews with John, with all of our guests, David Morgan, on all of them, Andy Schechtman, Craig Hemke, etc. All of the links and descriptions, articles, etc. that the guests talk about, Alistair McLeod, all of them. And you won't miss a single episode that way, no matter what happens in the big tech world of you may only say things that are politically correct or officially approved by the elite. No, we're going to keep striving to tell the truth, and hope that you'll take actions. We'll all take actions to take care of ourselves by insisting to be treated truthfully. And John, any final thoughts for our audience before we wrap?
Yes. So the only thing is that if you are interested in gold and silver, try to the extent that you can, get physical. If you have a synthetic position, liquidate it. Go get physical. And the other thing is that forget about the price. Look at what's happening with the Comex inventories. Look at how much gold and silver are leaving the vaults, because that's going to be the ultimate determination of where the market's going to go over the next 6 months.
As you've pointed out, silver is the only commodity that is a fraction of its 1980 price in an environment where the currency supply has been multiplied many-fold. So whereas the purchasing power of our currency has been dwindling dramatically by tenfolds over that period of time, silver still remains a fraction of its previous high. Ironically, the upward price pressure that we saw, as we did back in January, and as we've seen other times recently, is an actual evidence of reality reasserting itself. It isn't something unreal that's happening or chasing a bubble or something. It's actually reality emerging in the reconciliation of the physical price to the actual physical demand. So it's quite interesting to see what's happening. When you say forget about the price, I'm actually thinking that's actually not forget about it, but recognize it for what it is. It's the semblances. It's the first breath of fresh air of a true free market reasserting itself here, when you actually have something trade at the price of demand that it takes to fulfill that demand. That's what markets are supposed to be, right? They're supposed to be price finding mechanisms based on the reality of supply and demand. So it'll be interesting to see what comes ahead.
Great.
So John Adams, Chief Economist from Good as Gold Australia and author and founder of Adams Economics. Thanks for joining us again here on Liberty and Finance.
Thank you, Donegan, for having me.
Some people call maple syrup liquid gold, and they think that putting it on pancakes and waffles is an idea that's pure gold. Well, at Miles Franklin, we think a pure gold idea is taking real liquid gold and turning it into real solid gold Canadian maple leaf coins. That's why right now, for a limited time, we're offering the purest gold Canadian maple leaf coins at just $105 US over spot. That's 4 nines of the purest gold there is in a pretty maple leaf design. And at only $105 US over spot, we'd say that's an idea that's pure gold.
This is Donegan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver dealer with Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized, private service from one of the oldest and best respected companies in the business. 30 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded, insured delivery or vault storage or IRAs, excellent prices, privacy and confidentiality, pay by check, money order, ACH or wire, satisfaction guaranteed. Call me directly at 419-819-9209 or my associate at 310-562-6400 or email us at kaiser@milesfranklin.com.